Good morning, everybody, and this is your S&P 500 day trade setup for today. So I just want to highlight something at the moment. So we've had a couple of weeks where we've been going sideways, and this weekly bar that has formed at the moment is a fairly strong, I won't call it an engulfing bar, but let's just call it a bearish bar that is forming. So this level, the low of last week, is obviously key. We need to get through that before we start sort of confirming this hanging man that we have in place here. So yesterday was pretty much a nothing day, big up, big down, nothing really going on. Oscillators group to the downside at the moment. We did break through structure, and that's this swing high here that we are testing at the moment. We have rejected it with an inside bar. So nothing convincing here. Oscillators group to the downside, so everything is pointing here that this could be an area where we're going to bounce. If that is the case, then pretty much just confirms a range, to be quite honest. So there is a bit of what looks like a flag inside this as well, which would, point to a move to the upside. So, or should I rather say channel? There's the trend line there, and there's the bottom part of it there. So, yeah, I'm kind of reluctant to be looking at anything at the moment. We do have a bit of a gap up this morning. We're coming up to some structure. This is aftermarket. We've got quite a few Asian holidays as well, so not going to read too much into that. Probably just stop hunting for those that are short at the moment, that have got tight stop losses. Typically what happens after hours. So for me, line in the sand right now is the high of yesterday. Okay, there is another bit of structure between that, which would be right over there on that swing low. So this is the first level, 40.79, 40.92, and then obviously 4100. So rejection of that should get us moving down. Oscillators easing up to the top again, which is quite interesting. And then we have non-farm payrolls today. So kind of a difficult situation to be trading right now. So you can see how messy this was yesterday. We did form a double bottom here on the 15-minute that hasn't really played out, rejected this level again, came back, and then you can see the sellers coming in here. So the shorts that were in play from sort of day before yesterday, are pretty much still in the market. They haven't exited the market just yet. So they are still definitely in. Trend is down at the moment. We are below the 155, so technically we should be looking for shorts. This 40-50 area is obviously a major area of support, which is why we tested it twice here. So I think it depends on the data today. If the data is negative, you're going to see us smash through 40-50 and target 4,000 again. If the data is something that we weren't expecting, and it was positive, you're probably going to see us smash through the highs of yesterday, touch the top of the channel here. So that's kind of the two scenarios that we have in play at the moment. I personally am leaning towards this is a rejection area. It's an area that we've broken through. We've come back to test it, and we're looking for a move down to 4,000. That's kind of the view that I've got at the moment. Bear in mind, if we get below 4,050, if we just delete the noise, so if we get below that level again, and you can see how important that is and how we've been playing with that for quite some time, then I suspect we are probably looking at something along the lines of testing the 155 here at 38.83. Look at the weekly oscillators here. So this is looking really tired, and this is looking like a bearish setup here. So there is definitely something brewing, and it's going to take a catalyst to drive it down. Earnings hasn't really done anything to the market at the moment, except that we've had a couple more banks collapse. So I am not quite on the fence. I'm leaning more towards a bearish stance at the moment, but I don't have a confirmation for that yet, so I need to get that confirmation first. But this could be the start. So yesterday was pretty much a down day, pretty slow down day, and now we've got a grouping of the oscillators coming back the upside, or separating, should I rather say, and coming up to structure. And that's kind of what we'd be waiting for. If you look to the left, there's the structure there. So you're looking for something to happen in that zone right over there. Okay, so that's between 4089, sorry, just say 4090 and 4076. I'm looking for some kind of rejection there for another attack at 4050. We drop below 4050, then you do have a gap to the downside. You've got quite a few tails here that are going to give us some kind of support. But the problem with this drop would be it drops below the moving averages, and then it becomes a dogfight to get back up above the moving averages, like we saw here in mid-March, this area here. Okay, anyway, that's kind of my confused outlook for the day, but it is a day-to-day, so anything can happen. You might as well just flip a coin, to be quite honest, and you've got a 50% chance of getting it right. Hope that helps, and we'll catch up with you on Monday. Whatever you do, please keep your stops really tight. Don't take anything for granted at the moment. Cheers for now.